A very good evening to one and all present today. I am Preeti Agarwal, President of Millennium Mams. We have gathered here with a very special guest, Mr. Deepak Parekh, Chairman of HDFC Limited, for an enlightening evening called Deepak Parekh Unplugged. Our guest of honor needs no introduction. He is at the helm of affairs of India's leading financial conglomerate for over 30 plus years. Mr. Parekh is a personification of consistent compounding. He has mastered the art of institution building by following two vital theories: allocating financial capital and allocating human capital, selecting the right person for the right job, and he can do it in a matter of 10 minutes. Today we are honored to have you with us, sir. Sir, we last met you in 2018 at your office in Mumbai, and since then, Millennium Ma'am has grown multifaceted. We have achieved some major milestones in the field of women empowerment. It is my privilege to be a part of my mentor's vision to spread financial literacy amongst women across the globe. The rapid growth of number of women investors in India is a proof that our country is growing in the right direction along with women inclusion. Under the guidance of our mentors, Mr. Vishnu Dhanuka and Mr. Sanjay Bhuwania, Millennium Ma'am has grown leaps and bounds, especially during COVID-19. Sir, let me take you through a journey of Millennium Mams till date. We went on a marathon of virtual speaker sessions during COVID-19, inviting the stalwarts from all walks of life and all parts of globe. From Miss Indra Nui to Mr. Narayanan Murthy, from Mary Buffett to Mark Mobius, from Mr. Chandrasekharan to Mr. Sanjeev Mehta, we had 100 plus speaker sessions during COVID-19 alone. We opened 2 new chapters, Bangalore chapter and Mumbai chapter, with an increasing number of members each year. I would like to share about a unique program called Buffett Mantras by Vishnu Dhanuka, which has been running successfully for over 17 plus years now. The program covers the tenets of the legendary stock market guru, Mr. Warren Buffett, and helps to simplify concepts related to investments, especially for beginners. The 12-hour intensive program has enabled and empowered thousands of homemakers and working women to take control of their finances and make better financial decisions. Now, sir, let us all put our hands together to welcome sir on stage to inaugurate the Buffett Mantras for 2022. So let me take this privilege of introducing our panel to you. Ms. Rachna Prasad, our past president and current advisor of Millennium Mams. Namita Mohanka, vice president of Millennium Mams. Meghna Bajoria, committee member. Sirisha Kadiala, member. And Rashmi Jawar, committee member, Millennium Mams. So we all are eagerly waiting to ask few questions. So the world has been evolving since after COVID. And there has been dynamic shifts across all sectors and across the globe. Sir, added to this, there has been some geopolitical situations, Russia-Ukraine war, Taiwan war threats, even German economy showing some signs of collapse, sir. Sir, I had read in an article that 66% of the top CEOs of India are saying we could experience a slowdown or a recession in India. But sir, I believe that you belong to the optimistic 34%.
Minority.
Sir, I want to know, why are you so bullish on India?
I think everything is going in India's favor. We are today the fastest growing large economy in the world. And we have been last year as well. Now we are not decoupled, and whereas America and Europe are having negative GDP growth rate quarter after quarter, we are having positive GDP growth rate. I agree, next year, this 22-23, we may not be able to achieve a 7% GDP growth rate, but it will be marginally lower. Because we are not decoupled, the recession or the looming recession in Europe and in US will have some impact on us. But India basically is a consumer-driven, domestic consumer-driven economy. The local demand is ensuring that we don't get into a recessionary trend. And even at the pandemic level, if you see, what did most countries do during pandemic? They printed more money, and they gave away a lot of salaries, wages to people who were not working. UK did that, US did that. We already had a problem with the fisc, and we were very prudent. And we did not print more money, but we gave food grains, like we are giving free 5 kilos of grain, rice or wheat. And this scheme, which started at the first month, second month of pandemic, is going on, and it's valid up to December 22. So we have supported families of the lower class, lower level, middle class people, the vulnerable members of the society, by giving them some free grain. So basically, we are in a very strong position. If you take any parameters, let me give you automobiles. Between Navratri and Diwali, 3 lakh automobiles have been booked. Today there's a waiting list to get a car. Some cars, there's a waiting list of 15 months. If you talk to dealers, dealers are saying even demo cars have been sold in the showroom. Mahindra came out with a new utility vehicle, XUV 700 or something, and they took 25,000 rupees advance from each and every. So it is not a frivolous this thing. Your 25,000 is a large amount. And they got 1,50,000 bookings who paid 25,000. So it's bad for us because we get all the money, overdraft is paid off to us. So for banking system, it's bad because we lose the business of Mahindra because they don't need, they've got so much cash now, advance sales. And delivery is 15 to 18 months. It's not 2-3 months, 15 to 18, because there's some supply constraints in semiconductors. And so delivery time is also not short. Then if you see our food grain production, we have food security. we have political security, we have vaccine security. For a large country like ours to vaccinate 90% of our population is a remarkable feat. And it was done very efficiently, very well. We did not have that many COVID deaths as Europe or advanced economies had. And so, our management of food security is good. Our agricultural production has never been as high as 316 million tons this year. So there are various factors that I feel, take for instance bank credit. This year, the credit of banks have been 18%. In March 22, it was in single digit. In September 22, it's become 18%. The problem is the deposit growth has not been high. Deposit growth is 9%, credit offtake is 18%. It was always the opposite for the last 2-3 years, where deposits were coming, but lending opportunities were not there. So when more lending opportunities there is growth. So even that is a good indicator. Credit offtake is a good indicator of the state of the economy. Housing sales. I have never witnessed in 45 years the kind of demand I see in mortgage loans. And it's not only top end, it's affordable homes, middle income and high end, even high end homes. I was shown this 42 building here, it's a high end, but flats are sold there. So I saw that yesterday, and so 20 crore flats, but they are sold. So there is a latent demand in housing also. So most of the indicators are showing good results. Then you take capacity utilization. Today, most industries have reached around 80% capacity utilization. Now, 80% capacity utilization means that you have to think of a new plant. You have to think of expansion, because it always takes some time to achieve that. So even on that side, see the bank's balance sheets. Corporate balance sheets are stronger. Banks' balance sheets have become really strong. All PSU banks have provided adequately over the last 2-3 years for bad loans, and the balance sheets are strong. If you see bank results this quarter, they all have done well, including public sector. So I think the worst is behind us so far as we are concerned. There is no single indicator which makes me feel that we are going in a recessionary mode. I can go on and on, but you ask me more questions.
Sir, taking from there, I would like to ask you a question on fintech.
On?
Fintech, sir.
Fintech.
Financial technology. So it's set to revolutionize the way we transact. And recently, HDFC also has collaborated joint hands with Tata Neu. So, sir, how it's going to, what will be the future of financial technology, and how it's going to change the way we transact and the world, I would say?
So, there are a large number of fintechs. All will not survive. Some will fall by the wayside. But some have good technologies. And instead of competing with banks, banks have to work in tandem with fintechs. And many fintechs are startups. They can probably do a transaction cheaper and quicker than a bank which has large number of overheads and costs and all. And so I think a bank has to take over some fintech. And or they have to create their own fintech. Many of us are trying to create our own internal fintech to compete with the fintechs. But what you have to see is e-commerce transactions have gone through the roof. From last year to this year, they expect doubling of e-commerce transaction. And in a couple of years' time, India will be the largest e-commerce shopping base, higher than United States also. Today, US is number 1, we are number 2. Fine, our population is large, but more and more people are using apps to buy things. The other is UPI transactions. They've also gone through the roof. Then take demat accounts. 10 million new accounts have been added in a matter of 1 year. So you see the foreign institutions selling Indian stock. Now, let me talk a little about stock markets, since you all are attend AGMs and Warren Buffett and Munger and all that. So, foreigners have taken 1,55,000 crores out in a matter of 6 months or so. Now, why have foreigners exited India? See, we are the largest foreign Indian company today. We are an Indian company with a maximum foreign holding. At one stage, HDFC had 80% of our shares outside India by institutional investors. Now that figure has come down to 70, 69 or something. Now, most of the money that is coming to India comes from a fund called Emerging Market Fund. Fidelity Emerging Market Fund, Templeton Emerging Market Fund, Oppenheimer Emerging Market Funds. And the 4 countries that constitute emerging markets, which corners over 90% of the investment, are China, Russia, India, and Brazil. The BRIC. These 4 are the large emerging markets. So what has happened is, China has had major calamities in their tech stock, in their dictatorship issues, in their real estate, and over-leverage. Most companies have over-leveraged and the markets have collapsed. Chinese markets are down significantly. And Russia, you can't exit even if you want to exit with the war. So, those who have invested in emerging market funds of Fidelity people tell us that we are having maximum redemptions in our emerging market fund. So how do we pay back? When we can't sell China, because we've lost more than half of the value, and we can't sell Russia because legally it is not possible. We've made money in India, so the easiest way is to sell India and pay back our. So it is not due to, it's a perverse thing. It's absolutely perverse why we are losing out. We are losing out because we've done well, because our equity markets are efficient. It is easy to enter, it's easy to exit. And that is how we have lost this 1.5 lakh crores. But the positive part of that is that who has taken all these shares? These shares have been absorbed. More than 1.5 lakh crore has gone out, and 2.5 lakh crores has come into the equity market by insurance companies, mutual fund, and retail investors. Because they've had large number of public issues, rights issues, so the exit is 1.5 lakh, the inflow is 2.5 lakh. So we cannot have a stock market that is dependent on foreign money. It is much better and safer to have a domestic large market. And we have a long way to go. I was just talking to that Indian chamber, and I give an example that China has 60 crores retail investors. 60 crore. India has 2.5 crore retail investors. Look at the difference, and our populations are more or less the same. Chinese mutual fund industry is worth assets under management at $6 trillion. We have $500 billion. So there's a huge gap. And this is where the opportunity is. I think we have not even scratched the surface. And I am confident that more and more Indians, the demat accounts and all the way they are growing, I think more retail investors will come into the market as savers. So basically on fintech I've diverted, but on fintech, you see, take for instance payment banks. Reserve Bank came out with licenses to payment bank. Couple of companies surrendered their license. Because restrictions on a payment bank is so great, Sunil Mittal has a payment bank. When he meets me, he says, I wish I did not. Because you see, you can't use the money. You can collect from your clients, but you have to straight away put it in government securities or bank deposits. You can't lend. So it's just a collection agency. You don't make much money on that. So it is, you make money if you are able to take money and lend it. But when you have to deposit it in government securities or in your bank account and you are not able to lend, then it's very difficult. Very difficult. So fintech has a future, but I think it has a limited future because most banks are digitizing their procedures, are getting into state-of-the-art IT procedures, spending large sums of money, using the technology firms globally and in Indian firms to get their act together. And we have to compete with Google Pay, Apple Pay, all these types of companies. We have to compete. We can't let the foreign institutions take over our financial system. So we have to be ready, we have to be prepared, we have to fight, and we are all getting there. We are going to show that we can also do it.
Absolutely. Absolutely. Yes. Thank you, sir. Next.
Ma'am, your glasses.
Yes, Rashmi.
Sir, to take it forward, the insurance sector is still under-penetrated in India.
Sector?
Insurance sector, yes, sir. So it's like 4.2% in India versus a global average of 7%, whereas Taiwan has about 15 to 17%. So, sir, your take on this, please?
See, insurance is totally under-penetrated. I would say that India is an ancient country with a young population. So we are unique in that.
Yes.
You've read articles, even Chinese population is aging.
Yes.
Let's forget the European and all. Now take the youth here. You're all young. I have two sons who are in 40s. They don't take insurance neither for themselves nor for their children, because they say that we are confident. Why take insurance?
Okay.
Like my father took insurance policy for me when I was in college, but my kids are not willing to take insurance because they're so confident of the future. They're so confident that we'll have enough money if something happens to us, or we have enough means and we are educating our children. They will not need a kind of a support. Insurance is a support, but they don't understand that insurance may not be taken as an investment, but should be taken as a protection.
Yes.
And this is what we have to educate our people,
Absolutely.
that for protection, insurance is best. God forbid something happens to the earning member of the family,
Yes.
the family is taken care of.
Absolutely.
Like what I have done, I have 5 granddaughters.
Wow.
So I am very lucky. So what I have done for them is these kids don't bother.
Yes, absolutely.
But every month in April, I put some money in their account in an insurance company.
Yes.
And each of them will get it when they're 18.
Okay.
And they'll get a package depending on the stock market and performance and all. But it's tax-free in their hands.
Yes.
And the parents can't take it away.
Take it over. Absolutely.
And I have to put it till they become 18 or some 15 years or something. You have to put for 15 years. So I thought that was a good policy. The charges are heavy beginning. Insurance company makes money first, but later on the charges become negligible as the years go on.
Go on. Yes.
But something like that, it's somehow not catching up.
Absolutely.
It is not catching up. I've told half a dozen friends of mine who have grandchildren, this is you should do. They're not interested. So insurance penetration, I think, is only one way. It has to go up. It needs more education. It has got a little bad name of mis-selling.
Okay.
A lot of mis-selling has been done by insurance agents. And insurance is probably the only product which has the largest commission, front-end commission. You sell a policy, you get 30-40% first. And then surrender happens.
Okay.
So it's a gimmick. I think we have to try and get this mis-selling out. And people, because of the high commission, agents sell, they make their commission, they go away.
Absolutely.
And then the policy is surrendered after 1 or 2 years, and they're not kept for 15 years or what it is taken for. So I think insurance, the other issue we have in insurance is that for our country, we had one life insurance corporation for so many years. And earlier, all these years, they've improved significantly now, but earlier it was old, lethargic, bureaucratic company. I remember some older people telling me that we are getting some 400 rupees pension every month. To get that, you have to show that the person is alive. And it was quite a laborious process. You notarize it and take it, and to get 400 rupees or so, it was quite laborious. Although now they've gone public and they have, they have streamlined their operations. They're customer friendly. They are digitizing. And they've woken up because of the private sector insurance companies. But it is a behemoth. It's a very large company. It is probably the largest financial company we have in India, even bigger than State Bank. The kind of assets they have, kind of properties and stocks they have, and all of it at old prices. And so it's a very valuable jewel in government. We have to just extract value. And here again, today, if you see, one of the worst performing stock is LIC. Because they did not price it properly. See, government people are very worried to price it below market, because then they are accused you are selling your family jewel at a lower price. And they overpriced it, and it's 40% down from its issue price. Now, how will they sell more shares? They have only divested a very small portion of it. It was a cow, money-making cow. And they could have really extracted money for government revenues, which could be used for infra and other long-term projects. But the way they priced it and the way the stock has performed, they won't be able to sell 5% more. And then the bureaucrats will be worried to sell at a much lower price. That 1 year later, how can you sell it at 40% lower? So now this is a big problem of PSU. See, IDBI Bank, for 2 years we are hearing it will become private, but they can't arrange the price. The market price is very low. And they feel that the value of IDBI Bank is much higher. So that's the conundrum they are having in government. At what price do we sell it? So I'm very bullish about insurance. The two insurance companies, the life and general, are totally opposite. One is very long term and one is very short term. All non-life insurance policies are 1 year renewable. So the market is very competitive, because if I have lost Reliance Insurance this year, I'll make it a point next year to get the Reliance Insurance. And then it's something like that. It's very competitive. It's very short term, 1 year. So volatility is high. Sometimes you win a big account, sometimes you lose big accounts. And there the commission is not that high for brokers, insurance. Life is another business. It's a long-term business. And it's a good, you see, I learnt about life insurance when the governor, one of the former governors of RBI was R.N. Malhotra many decades ago. And Government of India, when Manmohan Singh was the finance minister, formed a committee in 1998. He formed a committee to look at opening up of the insurance sector. And I was a member under Mr. Malhotra's chairmanship. And the LIC chairman was there, and 2-3 other economists. And we recommended to the government, and they opened up the insurance in 2000. Our license of HDFC, we were the first to get a life insurance license in 2000. So I'm familiar now. Our life is only 20. Insurance is a long-term business. So the private insurance companies are gearing up, and I'm quite positive that you will see better results. You see, the other issue in insurance is investment guidelines are laid down by the insurance regulator. 25% investment must be, 25% of the total premium received must be invested in central government securities. 25% must be invested in state government securities. 25% must be in AAA bonds and then equity. Now, equity, only if it is unit-linked equity, unit-linked policy, then all of it has to go to equity. Otherwise, it has to borrow this pattern of investment. Now, this pattern has not changed for years. The government is absorbing a large amount of savings because their needs and their deficit and all. But if they reduce the allocation which they get for government bonds, that money should be available to the public because it's public money. Yes.
Sir, I want to take you back to the statement that you made about India being an internal demand-driven economy. So, PM Modi had coined the 3D demography, democracy and demand being, India's success story hence going forward. And we would like to add another D to it, which is digital.
Which is?
Digital. Right? So, my question to you is, what do we need to be careful in this formula?
See, we are a large population. Everyone is not familiar how to use the digital. I'll give you one example. I faced it 3 days ago. There's this Cricket Club of India in Bombay, CCI. There's a secretary of the president. President keeps changing every year in elections. The secretary, she fell down and got hurt, and she was admitted to Breach Candy Hospital. Now the payment had to be done online, and she called me to say, I don't know how to do online transactions. And they're not willing to accept my check, because check may bounce when the patient leaves. So, since I was associated with Breach Candy Hospital, I called the CEO and said, I guarantee this lady's payment. You please take her check and let her go. So and she's educated, and she's in a big club. It's one of the largest clubs. And she's the president's secretary. She's not used online payments. So she was uncomfortable. In a city like Bombay, if someone at that level is uncomfortable, you can imagine in smaller cities, rural. So, digital is the way to go future, but it will take time to become compliant. Secondly, lot of frauds are happening. Lot of frauds. We tell our customers who use our credit cards, if you go to Thailand or China, come back and change your credit card. Get a new one if you used it in Thailand or China, because we found so many frauds. You come back to India and your still card is used. And then you have to go with your passport to say, this is the stamp of arrival, it's fraud, you better give my money back. So there are lots of frauds happen. So, we've still not finalized or come up with a foolproof. So, I said this morning that where do we need global cooperation? We need global cooperation much more than any time before. There are no laws on cyber security. It should be global. There are no global laws on cryptocurrency. There's no global law. There should be global cooperation. One country cannot accept crypto and other can't accept crypto. So what is the global policy, regulation? And this something like IMF, EBRD, ADB or someone must get together and come with different countries representing what is in cyber security, and also is the same issue. In settlement of international trade is another issue. India is talking, can we settle trade in Indian rupees? This is now getting some momentum. So there are 4 or 5 issues. Climate-related issue in finance. How do you do green finance? So these are global issues, but because the world is so fractured today and there's no unity, and so there are no global policies. These are all global issues which we need to get together and work out. So these are some work to do globally. Still pending. Number of these issues are there like that, which have global repercussions, but it requires a global understanding and a global regulation for it.
Sir, following up on the digital, sir, India's first digital rupee pilot project is starting, and banks including HDFC will be issuing the e-rupee. So what do you think is the advantages of this, and what's your vision for this, sir?
Well, the advantage is you don't have to carry huge loads of cash with you. You can carry a lighter purse. But again, being old-timer, I would be worried about someone else using it, duplication, frauds. how do you protect it? Because again, it's the similar thing like credit card, a digital rupee, and it is still work in progress. I don't think any country has yet come out with a digital currency. We are probably ahead because we have the best IT resource in the world, and so we are a bit ahead. But I think it's still wait and watch. It'll still take time. But you know what is happening globally is you go to a departmental store, you pick up what you want, you walk out without paying. Face recognition. That's become very common in China, in Hong Kong, in US also, in some stores. So that is kind of digital, because you know you pick up 10 things, because of your face recognition, they are already charging you that amount. And they have your credit card or they have your digital account, they debit it straight away. And so that facial recognition is another way of making payment. So it'll take time, but I think it'll happen. How it will work, we have to wait and see how acceptable it is, how comfortable. I won't be comfortable, to be honest, with the digital rupee. I'm comfortable with cash, I'm comfortable with credit card. But I won't be comfortable with this crypto or digital or something.
So recently we had a privilege of listening to Mr. Abhik Barua.
Sorry?
Mr. Abhik Barua.
Abhik Barua.
Yes, and he gave us a wonderful presentation about all the positive points in the Indian economy. But also he left us saying that read about all the positive points, but have your own inward thinking. So I'd like your take on this. What kind of inward thinking and inward thinking? Have your own inward thinking. You keep the positives, but have your own inward thinking. So I'd like your take on this.
I didn't quite follow. My inward thinking is that one, I have not been as optimistic about India's future as I am today. And my only regret is I won't live to see that day. And you know, we always say India is in taking point, India is taking off. We are on the runway, but we never take off. I think now the time has come where we're actually taking off. And so you people are fortunate. You'll be able to see a transformation of India. You'll be able to see India as the third largest economy in the world. You'll be able to see a much more prosperous India, and you will be part of that. So I think we are transforming ourselves, and sorry, I forgot to put it off. Population control. We've already achieved from a way 2.5 to 1.7. So we are quite there. Population control, education levels are increasing. The key is education. Education is key. How do we educate our rural people? How do we educate our poor people? How do we educate construction workers' children? And this is the critical. If you have an educated country, and mass education, we have very highly skilled people. Many Indians are running global corporations in technology, and more Indians are taking that position. And but we need to bring up the standard of living. You know, someone talked about per capita income. How our objective should be increase per capita income. Now, per capita income increase is a must, and some of it is not shown numbers, because you know how do you per capita income on tax paid? So many people don't pay tax. So many people have additional incomes which are not shown. Like take a teacher. Every teacher gives tuitions, but the teacher does not pay tax on the tuition she gets. It's cash. Every teacher. I run a school in Bombay where giving tuitions is forbidden. But I know every teacher is giving tuition. And every parent wants their child to be number one, number two, so they send their kids to tuitions. It's across the country. So, you know, there are these incomes which are not recognized. So you can't call that this is the right GDP. I mean, the per capita income of India is so low. that China had this per capita income 25 years ago. We are still at that level. But it's not the right way to look at it.
Absolutely. Yeah.
Yeah. Sir, I want to ask you, sir, do you think India as a nation, sir, did we skip the manufacturing revolution? We directly shifted from agriculture to services. Sir, India being a very agrarian society, 15% GDP comes from agriculture, 49% is the workforce that is devoted to agriculture, and sir, 70% of India,
Services.
yes, they live in villages. So how do you think this transition is going to happen from agriculture to manufacturing? And sir, what would be the businesses that the Gen Z should look to? It should be primary, secondary or tertiary?
See, if you look at the composition of India's GDP, 20% comes from manufacturing, 60% comes from services, or 65%, 15% from agriculture. Then if you break up the population, agriculture contributes 15% of GDP, but agriculture consumes 65% of our population. So that percentage of population is not giving us the GDP that we need. That is the issue. So basically it's a faulty agriculture policy. Now the government tried their best, and the farm laws which they introduced were beneficial to the farmers, were very beneficial to the farmers. Their income, their revenues would have gone up, but still the farmers went on strike. And for so many days they blocked streets, and there were a hunger strike in Delhi that government had to withdraw a bill which was beneficial to them. Why? Because in agriculture, the farmers don't get the right payment and the consumers are paying far too much. It's the middleman who takes the money. And you know the famous saying that what is the price difference between farm gate to the food plate? That difference in India is the highest, because it has number of things. One is logistics is bad, transportation is bad, perishable goods perish because you don't have proper warehousing in villages, you don't have trucks to take the goods, you don't have air conditioner warehouses. And the middleman, the culprit is the middleman. The middleman is the one who makes the maximum money, and the middlemen who do this, bring the farm produce to the market, have convinced the farmers that this is bad for you, because their commission would have come down. Yeah. And today that is unfortunately the farmers relied on this and not on the government. This farm bill was one of the most futuristic bill which would have increased the income of farmers, the well-being of farmers, but they objected and they went on a strike, and government unfortunately had to withdraw that because they lost their patience. They were hunger strike and all. So the problem is logistics, cost of logistics, time of logistics, and you know, government had asked us some years ago, you are urban housing, why don't you do rural housing? And it's difficult to do rural housing, but we still did a survey in 4 parts of India. Housing was the 6th priority in rural areas, 6th priority. Not the 1st, 2nd, 3rd, 4th. They had priorities like, we don't get place to store our food grains. Perishable goods destroy because of rain or keeping it outside the hut. Education, water supply, availability of fertilizers. These are issues of theirs because they have some kind of abode. They have some kind of house, a roof, a thatched roof or whatever. Yeah. But so they need that, but they need a pakka house, but say we have other priorities. Yeah. And this was universal across 4 parts of India. It's the agricultural problems, transportation and availability of seeds, fertilizers, payment, right payment, perishable goods, logistics. These are our bigger issues than housing. And so we have to improve the logistics system. And you know, for years and years, warehouses of food grains, where do we keep? We have this year, we have a bumper harvest of 316 million tons. And the warehouses are full. Food Corporation was the only company that was allowed to take the food from the farmers and store it in their godowns. Now, who knows how the stock of food grain is kept? And our granaries are full despite government giving 5 kilos of free rice or wheat to the vulnerable members of the society. This they started in the second month of COVID. It's still on till December 22. Last 2 months are there. Then the government has withdrawn that. But despite giving 5 kilos without earning anything, or rice or wheat per month per family, our stocks are full, the granary is full. And the government took a decision in the interest of inflation in India. You know, Europe gets 50% of its wheat from Ukraine. And they stopped. Wheat prices in Europe have doubled, more than doubled. Now we have surplus wheat. We could have exported and made good amount of money. But Prime Minister said, if you export the wheat which we have, our domestic prices will shoot up. So to protect that, he banned export of wheat and some other commodities also. And despite having sufficient quantity. So what was your question?
Sir, we moved from
manufacturing. Yeah. Now, so
manufacturing.
See, we are the back office of the world. We are the software capital of the world. I'm not willing to buy the statement that we can't do manufacturing. We have to take, we are taking steps. Government has introduced this production link incentive, PLIs in certain industries, which some industrialists are looking at. Manufacturing creates more jobs. We have the skilled. Processes have been slow. It's good to see that Tatas and Airbus have started a big company in Gujarat, which was taken away from Maharashtra and gone to Gujarat. That's what the papers say. And which is employment generation. Then we have to seize the opportunity we have of the China +1 strategy. The perception of India in manufacturing is too difficult to get land and get started. That perception should go. And that perception is ingrained in most global CEOs. Manufacturing is difficult. They're willing to outsource their entire back office, their IT services, data centers. All this is coming. But we don't see global companies coming for manufacturing. Our cost of labor is cheap, we say, but it's still difficult to do business. So we have to improve that ease of doing business. And the only way it can work is states compete with each other. When states compete with each other, they are successful in getting manufacturing facilities. Let's take 2 examples. Apple manufacturing. How it went to Chennai when Bangalore was desperately trying to get it, that we have better IT people, better technology. But Tamil Nadu government gave incentives. Now take, what is our biggest problem is that we are the software capital, but we have zero hardware. For hardware, semiconductors, we have to depend on imports. Semiconductor or fab unit is called, is required in television, in telephones, in radios, in everything. Every electronic item needs semiconductors. We were totally, why these auto supplies delayed? It's because of supply chain disruption. It is because of semiconductors, which we were getting from China and which stopped. Because of the zero COVID policies, it was lying on docks where the ships were not coming. So we have to have a semiconductor unit here when the consumption is so much. And who are the major global manufacturers? Intel, Samsung. We should lure them to come here with incentives. Now that this Foxconn has come and Vedanta is doing it. Now, let me tell you what is the ask. You know, 5, 7 years, 10 years ago, Again, when Manmohan Singh was the Prime Minister, he formed a investment commission where Ratan Tata, Ashok Ganguly and myself, we were 3 members. We used to meet every week on Mondays at Ratan's office, and we've traveled across India to see how do we get money. That time Intel came to us. We want to set up. What was their ask? 1,000 acres of land, subsidized rate. Semiconductors are power guzzlers, so we want power at a concessional rate. We can't make money at these power rates in India. Import duty exemption on foreign equipment. And fourth, in that 1,000 acres, we will get our other suppliers and we can allocate land and divide land and give it to other suppliers, so no one has to go individually. We couldn't get any state interested. Tamil Nadu has now done the same thing to Vedanta and Foxconn. It is 1,000 acres, it is subsidized land, it is subsidized power, and they have said we will not charge you, or we will take care of the import cost, import duty on foreign equipment. So, you know, we miss opportunities like this. The same thing that could have happened 10 years ago, no state was willing to give. Today, Tamil Nadu is willing to give. And therefore, this fab unit, this unit is going to Tamil Nadu. But I would have liked Intel also to come here, because that's the global leader, Samsung and Intel.
So, sir, according to you, the first generation entrepreneurs, so which sector should they enter? Primary, tertiary, or secondary?
See, India is a lot of entrepreneurs, lot of youth, lot of ideas, lot of ambition. You have to in all 3 sectors. Why restrict yourself in one? You know, you have talent, you have initiative, you have entrepreneurship in you, and so you should see where your expertise lies, where there's an opportunity, and go for it. So you should not restrict yourself in either or. See where your heart takes you, see where your head takes you, and go for it.
Yes, sir. Thank you, sir.
So now coming to Sir HDFC Bank, sir. Sir, HDFC combined technology with market reach, geographical reach to garner market price. Sir, to garner market share. What will be the game changer for the banks today, sir? So that was the game changer for HDFC Bank, if you agree. Greater market share for HDFC. So what will be the game changer for the banks of today, according to you?
See, we were 2 companies in the financial sector. We had HDFC Limited and we had the bank. Many people confused they were one, but they were 2 separately listed companies. One only did mortgages and one did everything other than mortgages. One was an NBFC, one was a bank. Now, and there was total confusion in the market. Everyone called us a bank, and though we were mortgage. And bank shareholders were asking investors were asking the bank people, housing is a predominant amount in the retail financing of any bank. Largest part of retail financing is mortgages in most global banks. Auto loans, car loans, and all a small part. Personal loans, loans against shares, loans against property. These are all smaller, but bulk of it was mortgage. Why are you missing out on this opportunity? And why can't you start? Now, we prevailed on them because we were their parent. We had only 21%. We were not allowed to take more when we started. On the other side, the bank's biggest problem was, in these retail loans, which form 60% of their balance sheet, the duration of the loans was 18 months. Because car loans and all are short duration, monthly payment and all. So every 18 months, every year and a half, the bank had to replace the book and show growth. So it's a Herculean task. Now with the merger, if it goes through, it's still under process, the retail duration of the bank loan comes to 5.5 to 6 years. because the mortgages are 15-year product, 20-year product. So they get a big chunk. So that's a huge advantage for the bank. We have 4,000 branches, we are opening 2,000 more in 15 months. So we'll have 6,000 branches. We'll be as soon as the merger is done, we'll be the 5th largest bank in the world. And 3 are Chinese banks. So you don't know the balance sheet, the opaqueness and all of Chinese banks. So we have a huge task. Our balance sheet size will be 25 lakh crores. Market cap is huge. So the task really is how to do the integration. Integration is a big issue because 2 companies, cultures are different, systems are different, technology is different. Like, in housing thing, the person who brings the loan also gets approval. RBI doesn't allow. RBI has 3 distinct verticals. Marketing is one, credit is other, recovery is third. So the one who brings in loans cannot do the approval. So we have to follow the RBI rules. But it's a natural thing to do because we knew that the Reserve Bank is coming out with new guidelines for large NBFCs. You see, 6 companies collapsed during the last 3-4 years, big ones. SRE, PMC Bank, ILFS, Diwan Housing, India Bull, there's so many of these collapsed. So the inspection and the supervision of RBI has become much more stricter. And NBFC, they are concerned about many NBFCs. So recently they came out on October 1, but we knew they were coming out and they encouraged us also that it's better if you merge because they are bringing bank-like considerations for large NBFCs. So the same SLR, CRR requirement, priority sector was not an issue because affordable housing loans is part of the priority sector. But we had the disadvantages of the NBFC and no advantage of the bank because we can't take retail deposits. We don't get current account on which we don't pay any interest. We can only take time deposit where the interest rates are higher, 1 year, 2 year, 5 year. So we had the disadvantages of an NBFC, but we didn't have the advantage of the bank. And so because they were becoming bank-like regulations, we thought the best time, it is opportune time, and the government, RBI encouraged it. So we are going through that process. So at the moment, the process is on integration. There are number of issues today, very technical. Like for instance, no one has asked me why is HDFC Bank such a large market cap not on the MSCI index. We are not on the MSCI index. We are not on the MSCI index, Morgan Stanley index, because an Indian bank cannot have more than 74% foreign holding. And we are already 74%. So it's not in the index. There's no free float. Now in that 74%, 21% ours. We are considered foreign by RBI because we are 80% foreign held. Now it is 70% foreign held. But since majority of our shares are held outside by hundreds and thousands of mutual funds and pension funds and sovereign funds, and we are considered a foreign company. Since we are considered a foreign company, that 74% which the bank can have, they reduced it by 21%, which was ours. Now by merging, there's a huge gap. So we will be included in the MSCI index. The second problem we have, these are really technical issues. This is the first merger in India of 2 nifty companies. Neither NSE or SEBI have ever tackled nifty companies merger. 2 nifty companies. Now when 2 nifty companies merge, the company that is being taken over, they get delisted. But that delisting starts now. If the delisting starts now, we felt there'll be a $2 billion outflow in our stock because ETF only buys listed. That ETF weightage goes away. We are 8% of the index. So we had to move SEBI, we had to move NSE to say don't delist us now, wait till a week before the merger so we can tell the investors that it's a temporary few days phenomenon. And fortunately SEBI and NSE understood that this is a big problem which we have never faced. And we can't let a large company get delisted out from the Nifty 6 months before the merger or 8 months before the merger. So, you know, we have all these technical issues which we have never faced. Even we didn't realize some of them. But this is every day new problems come up. Now we have a school. We have 3 schools in Gurgaon, in Bangalore, in Pune. First thing RBI says, banks can't own schools. Now what do we do with our schools? That's a problem we had in our hand. So like that, we have an NBFC, Credila, which gives education loans. We have given 100,000 students education loans in 5 years. And 70% going abroad, 30% doing Indian courses. We passed 1 lakh kids. Now, a bank can't have NBFC. So they are telling us, we are waiting to hear from them, what should we do about Credila? We have to sell it? Or we'll have to have 60% sell, 30% sell, we don't know what. We are still waiting for RBI. So there are lots of these uncertainties at the moment, and hopefully in the next 3, 4 months, 6 months, these will get clarified. See, so far as insurance companies are concerned, asset management companies and property funds, all banks have it. All banks have it, so we have no problem in these. But it is the school, we have a foundation called HD Parekh Foundation, and the third one is this Credila. These are the 3 which we are waiting for RBI, what would be their view on it. But it will be a big bank, it can write larger checks, it can do bigger infrastructure financing, and Reserve Bank has instructed us that we don't want you to become a retail bank. We want you, if you're a universal bank, you must allot a large part of your funding to corporates.
Sir, maybe we see HDFC Tower in New York.
See, unfortunately, every bank, Indian bank that have gone abroad has lost money. Everyone has lost money for some reason. Like State Bank also lost a lot of money in New York. ICICI lost an arm and a leg in New York and in London. And you see what happens is if you have 1 branch or 2 branch, who comes to you for borrowing? Only Indian traders come who have heard of you. And then something goes wrong, some over leveraging, some malpractices, and you've done nothing for 10 months, then you say, oh, my balance sheet has not grown, I've called someone and give some exporter money and it goes bad, sour. So, you know, this is what happens. I've seen it with State Bank and Bank of India in New York very closely.
So,
Dubai is something which is interesting because I have gone and met the Dubai finance minister and said that so many people are buying properties in Dubai. Dubai, incidentally, has become the best city in India. And I heard yesterday that many groups from Calcutta also have gone to Dubai and established a base there, families have. And most of them are buying properties. So I said, we have that expertise. If you allow us a license to operate, then we can set up a branch with adequate capital and we can even fund others who are buying property and other facilities. But I don't know whether they'll bite into it, but we have requested them. And at least the Dubai government has said, we will support your application to Abu Dhabi where the central bank is. So we'll see, it's still a long process.
Sir, we see you wearing so many hats. So from housing to banking to AMC to sir what not, sir. So my question is, sir, which is the one closest to your heart? And where next do we see Mr. Deepak Parekh adding his Midas touch?
I think all of us want to ask this question.
Where will I go next?
Yes, sir.
What next?
In no uncertain terms, I have been told by the Reserve Bank that in the merged entity you have no role. They even went to the extent of saying that we don't have chairman emeritus and we don't want to start a precedent of calling you chairman. So before you ask us, we are telling you we do not accept you as a chairman emeritus. So where will I go? I will go home.
So, and the sector closest to your heart?
Mortgage business, because I've been there for 45 years now. I still remember the first loan we dispersed. First loan, gave the check, and we were so thrilled, we put that man on the cover of our first balance sheet, our first borrower.
Question is taking on the story that you just were about to say, that you're called the king of capitalism because of all the traits of top management, capital allocation, and people. So what has been your journey? Please share with us the journey from an outsider to an insider in the banking industry. It must be one of the most fascinating journeys.
I must say that I started my career, I used to come to your city every week.
Lucky us.
Every week. I'll tell you why. It was in 1971. Government of India came out with a regulation called FERA, Foreign Exchange Regulation Act. And they said all foreign companies have to list on the Indian Stock Exchange and you can only have 40%. And so I was with National Grindlays Bank in the investment banking division, and most British companies were in Kolkata. And I must have done about 15 IPOs of Calcutta companies, from Dunlop, Metal Box, Indian Aluminum, ITC, Brookbond, Lipton, Shalimar Paints, tea companies. So every week for 2 years I've come here. But the advantage those days was that when we go back in the evening at night and eat that, Indian Airlines was the only airline, eat that food, you want a drink before that. And those days Indian Airlines allowed you to take a hip flask. So in our coats we had a hip flask with whiskey, and the airline gave us water and ice. So to make the day eventful, we could have a good drink and eat that horrible food and get home at midnight. That was the attraction. But no, the journey has been very exciting. Because we did not know. I'll tell you, when we started, I went to see the UTI chairman before we started, before IPO. I said UTI was a very large institution that time, and they used to underwrite IPOs. So I said we would like underwriting. So the then chairman said, I don't think this will work. I have fiduciary responsibility. I hold public money. No one will pay you back, so I cannot spend public money in underwriting or subscribing to your shares. So I was thrown out. And he was right, because our IPO failed. IPO went into the neck of underwriters, and there are 2 or 3 underwriters from here. Calcutta also, I remember. And the Bombay underwriters, the brokers. And it opened at a 20% discount of its issue price. And we really didn't know what to do. And slowly we started building. And we had ups and downs. There was a time after 3 or 4 years when we got hordes of application, but we could not raise money. So we said, what do we do now? We don't have money to disperse. And we are getting more and more applications. So I still remember we prepared posters and ads. Please bear with us. We are inundated with applications. We want to give you the best quality service. So we will not accept new applications for 6 months. Something like that, because we didn't have money to disperse. So we've gone through those difficult days also, when banks did not trust us, our bonds could not be sold. So we've had ups and downs no corporate history is smooth. You have these ups and downs.
So just going a little further ahead, in the book A Bank for the Buck, written by noted journalist Tamal Bandyopadhyay, so convincing the likes of Aditya Puri, who had an enviable career at Citibank, to join a fledgling bank must have been a very, very tough proposition. So I want to know, what qualities do you look for while hiring somebody apart from qualifications?
See, I've recruited many, many people in my life. I think 90% have gone right, 10% may be wrong, or less than 10%. But I don't believe in lengthy interviews and give them a case study and give a psychology test and all those highfalutin things which HR people say. It's instinct, it's gut. First meeting is instinct and gut. Now, I knew Aditya Puri as a management trainee in Citibank, India. And one of his cousins was a friend of mine, my age. So we used to meet him on and off. We just joined Citibank. And for many years he was with Citi here, then he was transferred to Hong Kong and Malaysia. He was running Malaysia when we were about to get the license. So I thought of him and I took a flight to KL. I called him up and said, I'm coming there for 1 day, I want to stay with you. And his Mercedes car fetched me from the airport, KL airport, beautiful house with swimming pool and all, as the country head of Malaysia, Citibank. So evening I sat with him, had a drink and said, "Bhai, we are getting this banking license. You have worked in Thailand, you worked in Hong Kong, you worked in Singapore, now you are in Malaysia. How much will you do? Come and do something different. Come and start the bank." I made him an open offer. You become the CEO of the bank. And because he was a successful banker in Citibank, and he was valued at Citibank. And you know, those days we had to go to Mauritius because board meetings were there for Mauritius Indian companies, some funds. So from Singapore, I went to Mauritius. And he said, give me 24 hours. Okay. When I went to Mauritius, he called me, I'm on. Wow. And he said some conditions. I want 3 or 4 people with me. And a couple of them were, one was Citi, one was Union Bank of Switzerland, 2 were Bank of America. So we had a team of 4 or 5 people. And they came. Then there was a big argument about name, because RBI did not allow us to take majority. They said you can only take 25%. And then we said we have no foreign partners, and also we gave 5% to National Westminster Bank of UK. Puri and I went to London because NatWest was not in India. From there we went to New York because one of the banks, Bankers Trust, was not in India. It was a big bank that time. And from there we went to Singapore because DBS was not here, Development Bank. All 3 said yes, but National Westminster Bank was the first to say we'll take 10%. And 15%, because we could take 40. So we were down to 25%. And then ESOPs and all, we are now to 21. Now the name of the bank, we are trying to see, the advertising companies gave some Bank of Bombay. Because when RBI asked for licenses, they got 112 applications for new bank licenses then. Some applications are on a postcard. I want a banking license, just like that. And they had a committee under one of their directors, Sharad Marathe, who is a very famous ICS officer. And they looked at the applications, and they gave 4 or 5 licenses at the same time, but they gave different branches, different regions. Like they gave headquarters of ICICI Bank in Baroda, headquarters of Centurion Bank in Goa, headquarters of one other bank in Chennai. But they said yours was the best application, so we are giving you in Bombay. So our headquarters were in Bombay. The ICICI still has the AGM in Baroda. So we got Bombay, and then we said what name to give. I said Bank of Bombay. That would be a great name, Bank of Bombay. No. He said, you can't give them BOB. He'll say Bank of Baroda, Bank of Bombay. There'll be total confusion. And then he pressurized me to say, call it HDFC Bank. And I gave in. And no royalty, no fees, minority shareholding, totally independent, because RBI said arm's length relationship. But gave our name, which helped them to enter, because we had established our credentials to some extent already. So that's how it started, and he did a remarkable job. And he was a total different person than the present CEO. That time we needed an aggressive person. Now we need someone who will bring culture, to bring 2 institutions together and all that. So I think things happen well. And I even recruit people in a taxi. I have to go somewhere and the car is not there. I'll take a Kali Pili in Bombay and take a taxi, and someone who's waiting, I'll take him to the next appointment. Taxi mein interview karke leta. I took Satwalekar that way, who became our managing director. Then he became the head of our first life insurance company. So mostly it is gut and instinct. It is gut and instinct. Now, you know, there is this new company, 5 years old, which is very, very large, and it has huge potential, called NIIF. Have you heard of it? No? NIIF, National Infrastructure Investment Company Fund. And it has money from Australian Super to AIIB to Temasek to GIC to ADIC to ADIA, Canadians. And government has 49%, private sector has 51%. All of us have put in money. And it's a big company. And we had someone from Washington only as our first CEO, Sujoy Bose. Now he just tendered his resignation because he moved without his family, and he said, I'll do for 5 years. So now we are in a selection process, and yesterday, before taking the flight to Calcutta, we had a selection committee meeting, and we appointed Russell Reynolds, and they gave 10, 12 names. We've shortlisted 4, and they're now going to ask these 4 people, are you interested? And then we will see them next week. And so we have a task of appointing someone that way. So I've been involved in a lot of selections at senior level.
Sir, I would like to go back to your student days, sir. So you had your education in London. So did that lay the foundation for your success? And if you are comfortable, if you can talk about 10 shillings and 6 pence story with us.
Sorry?
2 shillings. Yeah, 2 shillings and 6 pence story with us.
No, you see, when you are a small family and you stayed at home throughout, and you suddenly go to India, first of all, you're totally dependent on people here. The first day you go there, you don't know what hit you. And I was staying in some digs far away, and 15-minute walk from the station, got there in October, cold and miserable weather. And so you wonder, why the hell have you come here? You feel like running back and coming back home. Then you say, what will people say? That sort of shame forced you to stay on there. And So it was difficult days. I went there in September, and October was my 21st birthday. 70. Yeah, 21st birthday. And I had 3 or 4 Sydenham College friends who were there doing accountancy, and one was at LSE. So I said, I'll take you out for dinner, but my budget is 2.5 shillings, quarter of a pound. Because that day there was no money was there, and RBI didn't allow much money to be remitted also. And we found a restaurant, 4 of us went, 4 of us. And the bill came more, and each one had to contribute 1 shilling extra. 1 shilling. And, but those were the days we were no money. In fact, I was fortunate. My father was in Central Bank of India. And this is pre-nationalization days. So since he was very senior in the bank, and Central Bank had a branch in London, 1 branch, so he arranged a £10 overdraft for me. £10. I used 1 or 2 pounds, but I have not used it much. And the minute the bank were banking nationalization happened, he said, close the account, pay the money. Because it was unsecured, and it became a government bank and all that. So those were difficult days, but you have to survive, you have to go through. You see, the trouble is, some of the younger people in India have not gone through that pain. Yes, they've had it too easy. Yes. And you must then, because you've had it easy, like I tell my sons, you had it easy. You're well educated, now you have to work hard for it. Working hard, no one dies working hard. You have to work hard. And to make this thing. You can get the basic education, the family upbringing counts, the education, and all of you have got that family upbringing. You've got education, now you have to be determined and work hard.
Sir, a request. Sir, conclave with the HDFC Parivar has been on our radar for quite some time. So for next year, on 8th of March, International Women's Day, so we would love to have a conclave with HDFC Parivar from the heads of mutual fund, bank and insurance. So sir, your views on it, and because we would definitely need your support to have that event.
See, the video I saw, I'm the only person who has talked to you twice after today. All the others have talked once. So first get those other people to talk to you twice, and then I will come for the 3rd time. I did not see any repetition there. I was the only person who is repeating today.
No, sir, we are really honored and obliged. And even our Berkshire Hathaway visit for the Omaha
Are you going this year?
Not this year, sir, no. But we are planning to go in 2024. Yeah.
24.
24. So we would request you to come with us.
You are risking yourself. Because both the gentlemen are, Charlie Munger is even older than Warren Buffett. But I'll tell you one thing. There is one person.
Yes, sir.
Called Anil Narang. Mm-hmm. I don't know if anyone has heard of him.
Yeah.
You met him? He has been 23 years he's attended Buffett.
Yes.
And he comes and talks to, I've told him to come and talk to our people. Mm-hmm. He's talked to our mutual fund, he's talked to our insurance people and all. I think you should call him when he's next. Sure. When he's next in India. He's addressed you in Bombay or here?
No, in Calcutta.
In Calcutta.
In Calcutta only.
We went for the first time. We went in the year 2012.
Yeah.
That's when, before we went, he came, and he's in constant touch with us. And
good.
He's been very kind in sharing his experience.
He's a vegan.
Yeah.
And you won't believe, when he came and spoke to a couple of companies, and he comes for a short trip, I said, what do I give him as a token? So he was staying at the Oberoi, Trident. So I gave him a carpet, small carpet which he can carpet. where he can keep it in his bedroom or something. He returned it back. He said, it's wool. I can't take it because I'm a vegan, it's wool. So he crazy that way.
Sir, we are running short of time. So thank you very much. So it is 7 p.m.
7, okay.
Yes. So now I request Rachna Prasad to give a vote of thanks.
We didn't need all this question answered.
Hello, everyone. So, first I would like to thank Sir Mr. Parekh. Our previous trip to Berkshire Hathaway, no one can forget that. Definitely in 2019, certainly enriched our knowledge as investors. However, our thirst for greater investing wisdom remains unquenched, and we are again planning in 2024. So we are positive that we'll be able to make it. And so you made the trip worthwhile by arranging a meeting with Mr. Ajit Jain, the Vice Chairman of the reinsurance business, Berkshire Hathaway. A big round of applause for Sir. And talking about Sir, he says he was too broke to have any dates to creating $113 billion bank. Do you think, Sir, the women back then, they didn't understand the value? So do you think so? We thank God and our mentors that we saw your vision and potential and invested in HDFC. Yes? We saw your vision and you broke the myth and made a statement, broke today, rich. Yes, sir, rich tomorrow. Thank you, sir, for attending our session and making our dream come true. Attending your session has made the wait worthwhile. Yes, we've been waiting for last 2 years, and we certainly feel more empowered than management graduates. We shall still keep hoping that you will come up with a bestseller soon. So we really want to read more, and hopefully we'll get the chance in future. And now I would like to request Dhanuka sir to please come up on stage and felicitate Mr. Parekh.
I would just request, when I got the Padma Bhushan,
Yes, sir.
they give you a letter with it.
Yes, sir.
You're not supposed to advertise. So, although you have done it, I have not done it, but this, if someone sees it, they may take it away from me.
Mr. Bhuvania, please come up on stage. Bhuvania sir, please, if you could do the honors. Thank you, sir.
Thank you.
Yes, sir. Please join us for a photograph. Yeah. After the photograph, please join us for high tea. Thank you so much for being there.
Thank you. Thank you.
Thank you, sir.